So we are just a few days away from ringing in 2012, and in this morning's Money Matters, we are focusing now on financial resolutions for the new year, and Martin Geitz from Simsbury Bank is here to tell us a few ways we can do some things that we can do with our money in the new year. Good to see you, Martin, again.
Good morning, Logan. Good
All
to
right,
see you
so
as well.
what's the first tip for the new year and what we do with our finances?
I think the first New Year's resolution ought to be to make sure your retirement is secure. So look at your retirement savings plans, look at your employer-based retirement savings plans, usually a 401k plan, as well as what you have in your own control in an IRA at a local bank or in an investment account. And on the employer side, make sure you're contributing as much as you can in order to maximize the match that you get from your employer.
Sure.
Most employers give you a 50 cent for every dollar that you donate, up to 6% of your salary. They'll match it with 50 cents. You think about that, Logan, that's a 50% return on your money.
It's free money that your employer is giving you, really.
Exactly. It really isn't. And you really want to maximize that as much as you can. On the money within your own control in an IRA, you can add to that. You can do it through automatic deduction from your payroll. Banks can help you with that. Banks like Simsbury Bank can help you easily move money from your payroll into an IRA. And a bank IRA, a bank CD is also a very safe and secure piece of your retirement savings. Your principal is going to be there. It's FDIC insured. You look back over the last 10 years, there really hasn't been much growth in the equity markets in the United States. But if you had invested in CDs through that time period, you would have had all your principal plus your earnings on that for that time period. You would have been a net winner.
And it's so much better to just make the decision early on and have that money taken out of your paycheck before you ever even see it, and then you don't have to worry about trying to then save it and do any other kind of transaction, and then you've got it taken care of.
That's exactly right. Makes it real easy.
What about emergencies or maybe large items? Maybe the car breaks down, or you know you're going to have to buy a refrigerator or some kind of an appliance or something.
That's a great point. A second great resolution is to make sure your safety net is there. And there are a couple of ways to do that. One is, as you were just saying, have an automatic deduction out of your payroll every week, every 2 weeks, that will build up your savings so that you have a savings account that's available in case an emergency arises, or as you say, you're saving for a new TV or a new car, you've got the money there. Another way to have a safety net is, if you're a homeowner, is to have a home equity line of credit. You don't necessarily need to borrow under it, but you've got that line of credit there available in case something happens, and it's quick availability of cash.
The interest rates are really low, probably historically low. Is now a good time to kind of see what you're paying and maybe if you can get a better rate?
That's a great way to put money in your pocket, is bring down the interest rate on whatever it is you're borrowing. For home mortgages, 30-year fixed-rate home mortgages are now around 4%, in some cases lower than 4%, which is just incredible. So this is a great time to refinance your home if you haven't already done so.
What about if you've got maybe a kid on the way, or you're thinking about having a kid, or you've got a young kid? Do you put money away for college now, or can you wait a little while?
You ought to start putting money away for college as soon as that child is born. Meet with your financial advisor. There are some great tax advantage programs. Meet with your local banker. There are some great bank-based programs, and you can get those at banks like Simsbury Bank.
Perfect. Martin Geitz from Simsbury Bank. Good to see you, Martin.
Thank you, Logan. Merry Christmas. Happy New Year.
And to you. We'll see you on the program in the next year, 2012.